Hello, yes. I'm going to do my Sunday scan on top of the lookout here at Fenwick Forest. What an absolute blessing and a beautiful day. Listen, what you think about comes about, and what you focus on grows. That is one of my favorite all-time sayings by one of my favorite investors, Gerald Peters. Today, I'm going to show you how I look at the markets, how I prepare for the week ahead. Uh, I do believe that with a little research and preparation, you got a better chance to beat the market than doing nothing at all. Listen, I know what Warren Buffett has said. Trust me. Unfortunately, he doesn't take his own advice. He did a lot of research, he did a lot of preparing, and he beat the market. So I'm thinking about the market. I'm thinking about getting richer, trying to make it come about, and trying to grow my portfolio. This is how I do it. The tools that I use. This software here is Thinkorswim by Charles Schwab. I don't receive anything from Charles Schwab for using Thinkorswim. They don't give me better executions than you. They don't give me free commissions. They don't give me any money, room, rent, board, none of that. They just give me a really good service. And I really like Thinkorswim. It's what I day trade on. It's what I use for investing. It's what I use for investing with clients. I just think it's a really, really, really good platform. Okay. And there's several other brokers out there. There's E-Trade Pro. There's Interactive Brokers. I don't know if Goldman Sachs has something or not, but this is just what I use. You use whatever you want. All right. At the core of my belief is long-term investing. I think everybody needs to invest long-term. This helps me prepare for the week ahead to get a little bit richer in my long-term portfolio. I want appreciation, and I want a shit ton of dividends. A lot of dividends. Millions and millions and millions of dividends. I don't want to give you the exact number because I'm afraid it's going to scare you, okay? But I believe that you can do it too. I'm hoping to give you a little bit of information to help you out. Okay. If this is something that interests you, hopefully I can teach you something and give you some more resources to go check out, like Gerald Peters. Shout out to that guy. Okay. So I like to start my Sunday scan out with checking the tide. This is what I call the tide. It is the S&P 500, the NASDAQ, the Russell 2000, the Dow Jones Industrial Average. I like checking on some commodities, especially gold, sometimes silver, copper. I really, really like to look at bonds, treasury bonds, like the 20-year, the 10-year, okay? And last but not least, you got it, Bitcoin, the new sector of the economy. This is what I call the tide, and I believe that when the tide is up, when there is a high tide, that lifts all the boats around it. When there's a low tide, it brings all the boats down with it, okay? This tide represents the overall direction of the market. I start with the S&P 500. For those of you who don't know what that is, it is 500 of the largest U.S. companies put together in a basket in an exchange traded fund, okay? It's great for measuring overall momentum and investor sentiment. It's great for measuring the U.S. economy. It's probably the most followed index in the world is this right here, okay? What we're looking at is a 1 year, 1 day chart. And this candlestick right here is Friday. We're seeing major resistance, all-time highs up here above 600. It's filled here 3 times now. RSI is approaching 70. If you want more information on these indicators, I highly recommend you go look up Gerald Peters. He's excellent at explaining this. I'm doing high level, upper level stuff here. You may have to go back and then watch this video, whatever. Anyways, S&P 500, everything is aligned. Looks like a stage 2, stage 3 breakout. This week, we're going to see if it can break out from that resistance and go to all-time highs, baby. Next up, the NASDAQ. This is tech Heavy, Apple, Microsoft, NVIDIA, AMD, Skyworks Solution, Taiwan Semiconductors, Broadcom, you name it, Tesla, Think Technology. A lot of technology companies are listed on the NASDAQ exchange, and it is as well facing resistance near all-time highs. RSI almost 70. The MACD signal line has crossed, and we see momentum pretty much gone in the stochastics. Going to be an interesting week for technology. A lot of money has been flowing into technology, especially the past week. We'll explain further here in a second. Russell 2000, the 2000 smallest companies, not smallest, it's 2,000 small cap companies in the U.S. market. Usually when this is breaking out, it's really bullish for the overall market because it means people are risk on, baby. They want to get risky with their money because they're investing in these companies that haven't really proven themselves yet. They're on the come up. They haven't made it to the big leagues like the NASDAQ and the S&P 500. That's the Russell 2000. 2,000 really small companies, and we got a nice looking breakout here. Something I'm noticing, though, between all three charts is Friday, the candlestick looks like an evening doji. I highly recommend you look up candlestick charting, too. An evening doji represents indecision and fighting between the buyers and sellers with no clear direction. Usually an evening doji is a trend. It's like a trend change, okay? And it kind of looks like the indicators are lined up for that. We'll see what happens. It's still below its 200-day, this red line, the 200-day simple moving average. The green is the 5-day exponential. This one is the 10 exponential, and that's the 20-day simple. Okay. Next up is the Dow Jones Industrial Average, baby. We call them the diamonds. These are the 30, let's say, really reliable, well-known companies in the U.S. economy. They're pretty industrial. There's some financial, a lot of industrial. Here, let's go over some of the companies. Amazon, you've heard of them. That's in this sector here. Not sector, indice. American Express, Amgen, Apple, Boeing, Caterpillar, Cisco, Chevron, Goldman Sachs, Home Depot, Honeywell, IBM, Johnson & Johnson, Coca-Cola, 3M, McDonald's, Merck, Microsoft, Nike, Procter & Gamble, Sherwin-Williams, Travelers, United, Salesforce, NVIDIA, Verizon, Visa, Walmart, and Walt Disney are all put in a basket, grouped together in an ETF that you can buy right here, okay? And it looks like they're also breaking out a little bit, pushing higher. We'll see what can happen. Next up, we'll go on ahead and shoot for Bitcoin. Now, you got to remember that Bitcoin is traded 24/7. So if you want weekend pricing, you should probably go to Google, Coinbase, your crypto wallet to get the most up-to-date pricing. This just represents what happened Friday. Now, it may be 24/7 trading. If you can see my mouse here, we might be having some after-hours action. I don't really know. It's Sunday at 8 o'clock. I don't know what the exact price is right now. I like ARKB because I'm pretty sure it has the lowest fees out of all the Bitcoin ETFs. And I'm going to put my cowboy hat here down a little bit so I can see. Yeah, it was so windy up here earlier. Now it's so nice. Anyways, ARKB. So I like it because it kind of reflects the price of Bitcoin a little closer. 104, when I look this up, I don't really have to go to Google. I can guess that Friday it closed at probably 104,000. But with Grayscale, it says $82.23. So that doesn't really. I mean, I can look at the charts and see that Bitcoin broke out to all-time highs and now it's having a pullback. But ARKB is pretty odd. Like right now, it might be at $105,390. Anyways, Bitcoin pulling back. It might be forming a stage one gosh, I can't say this word. Accumulation zone. Did I say that right? Jesus. Pray for me. Gold. We'll go to the commodities next. Gold had an incredible 2024. Incredible run. Now it looks like it's in a massive stage 3 distribution zone with the MACD turning on the signal line. You got the stochastics gaining a little bit of momentum, but these last 2 days were pretty nasty. Watching gold. Last but not least, we got bonds. You got to remember that when bond prices go down, yields go up. Yeah, did you hear that? When bond prices go down, the yield, the income it pays, goes up. It pays the same coupon rate. However, because you're paying a lower price, that represents a better yield. So bond prices going down, not always a bad thing. Right now, I think you can get 4.49% on your bonds for 20 years, okay? I believe those are semi-annual payments. Don't quote me on that. After I go through the tide, I like to break it up into the sectors that make up the S&P 500. The State Street Global Advisors, the spiders sectors are really good for this. I will pull it up now. So I have a watch list called the TAD, and I click it like that, and then we go to sectors. All right, let's go through the sectors really fast. The smallest sector of the U.S. economy is, can you name it? Materials, basic materials. This is like Sherwin-Williams, LIN, you know what I mean? Sherwin-Williams, and the like. So XLB, not doing a whole lot. Looks like a little bit of money has been pulled out now that we're here in this stage 3 zone facing resistance. Okay, next up we got real estate. Man, Donald Trump is on Jerome Powell's booty trying to get him to lower interest rates so money is cheaper to borrow. Real estate kind of looks like it's breaking out into a stage 2. We'll see what happens. Consumer staples. This is Coca-Cola, Pepsi. We can pull up the FinViz heat map. Let's see. FinViz. All right, let's pull up the heat map and we'll check out some of these companies. That's the 1-day performance. I really like to look at the 1 week since I do this every 7 days on Sunday. So consumer defense, you can see a lot of money getting pulled out. Walmart, Costco, Pepsi, Procter & Gamble, Colgate. Now, as I'm going through these sectors, if I notice a big trend change, then I will dive in to the last layer of the onion, and that is the individual companies that make up the sector. And you can tell, Colgate not having a big breakout. Procter & Gamble pulling back as well. Coca-Cola, money flowing out of that. Pepsi's getting really rocked. Let's look at the yield for Pepsi. Almost 4.5% yield for Pepsi. I don't drink Pepsi products. I drink Coke products, but man, Pepsi is getting absolutely annihilated this year. Next up, we got utilities. Next Air Energy, Southern Electric, Duke, Dominion Energy. It seems like it's getting money pulled out of it as well. RSI pulling back a bit, MACD really turning, and momentum getting sucked out. Did I already explain stochastics? That's like measures the closing price of every day, and if stocks are closing at their lows or near their lows, the stochastics will start pointing down. You'll get these big red bars. Notice on these big days where it closed near its low, look at the stochastics at the bottom here, how big these red bars are. Next up, industrials. Oh gosh, why is this messing up? Industrials breaking out to all-time highs, baby. That's because you got to get your trash taken out. Look at waste management way up here. Republic Service. If you don't like the green trash cans, you can go with the blue ones. You can invest in trash. Are you kidding me? Something that you pretty much have to do. I can invest in that and receive dividends? What? Are you kidding me, bro? You gotta be fucking kidding me. I can invest in trash companies? Man, the public markets are such a beautiful thing. I don't have to take the trash to the dump. I can invest in the trash companies? You gotta be kidding me, bro. Caterpillar. You tell me I ain't gotta move any dirt. I can just invest in the company. I ain't gotta sit on the tractor. I can just invest in it and watch that green thing go around. Yeehaw, baby. Come on, look. John Deere going up. Going up. Industrials are rocking. Technology. Boom. A lot of money flowing into technology, almost at all-time highs. That's companies like AMD. Look at that money flow pattern. Beautiful stage 2 breakout right there. NVIDIA. Beautiful stage 2. Look at this confluence here. Look at all your moving averages tightening up. Your stochastics clearly trend change. RSI pretty much calling the bottom on this right here. Man, NVIDIA really trades the money flow well. Again, this is 1 year, 1 day chart. Let's go. Tesla is not in this. Tesla is consumer discretionary. We haven't got there yet. It's XLC. Anyways, no, it's communication. Anyways, XLV healthcare. This is a beautiful stage 1, stage 2 breakout this week. I'm watching XLV for a move higher. Anything could happen. This is not always right. Investing is not a guarantee, but let's see if XLV can create a nice stage 2 breakout. Financials, JP Morgan. You're going to let the bankers get rich without you? You can invest in the bankers. Don't let the bankers get rich without us, guys. Come on. Come on now. Look at this resistance up here. Nice doji candle. We'll see if it can get to the next stage of the game. Communications. Meta. You guys get on Facebook today? I get on Facebook. Their marketplace is insane. Let's look at Meta. Looks real similar to XLC, don't it? That's because it's in XLC. It helps XLC move the way that XLC moves. All right? XLY. Oh, let's go back to XLV real fast. I want to go over United Healthcare. XLV, see that big turn? I bet back here is when United Healthcare got rocked. Let's look. Wow, isn't that crazy? Isn't that crazy? It's because United Healthcare is in the XLV sector. If you buy XLV, that gives you exposure to United Healthcare and a lot of other healthcare companies. We were XLC. All right. XLY. This is Tesla right here. This is Tesla. Why? I feel like Tesla's technology, but who am I to judge, right? Let's look up some other consumer discretions. Amazon. Get out of here. McDonald's. You want to see a beautiful chart? Let's look at McDonald's, man. Let's look at McDonald's. First Home Depot. I feel like all kinds of people are going to Home Depot. Lowe's. Man, oh man. See, the Dow Jones is getting pulled down hard because of these companies right here. All right. Yeah. XLY. What was the company I was looking at? McDonald's. And then Starbucks. Ain't nobody buying $6 coffees. Come on. Come on. But they buying Happy Meals. Look at this chart. You guys want to see a beautiful chart? Look at that. What if every time you went to McDonald's, you said, hey, I also want to buy a share of stock too? Just go ahead and give me one share. I mean, you'd be rich. You'd be rich. McDonald's. Energy. XLE. Now, this energy charts really freak me out. I mean, they're not. This is one of probably the worst performing sectors. I'm pretty sure healthcare is actually the worst performing sector, but energy names, you really invest in them for their yield. But anyways, energy, like Chevron here, because Chevron's in energy, looks like it's breaking out. That's a beautiful breakout right there. Energy really does follow the money flow pretty well. This is a really picture perfect stage 1. And Just because it's stage 1 doesn't mean it's going to go stage 2. It could go any direction. We don't really know. We're just using these indicators to give us, hopefully, an advantage, to give us a chance to get rich. What is BP? Probably BP. Yeah, that's probably the ticker for BP. Just BP. It looks like to be turning 2. After I go through the sectors, then I go through the 1 week performance just to check on the individual companies in S&P 500. And what do you know? It looks like the charts we just went over. A lot of money flowing into tech, a lot of money getting sucked out of consumer defense and utilities. Now, it's funny because in April you would look at this and technology would have gotten rocked. It's a flight to safety. It's really just the money moving from one sector to another and then going back here and then going back there. Technology would have been all red and you would have seen a huge flight to safety in gold. And now it's the reverse. The waves have pulled back on consumer defense and they are crashing on the technology island. The tide has shifted. What is next? Let's go to exchange traded funds and look at your leverage funds really doing triple pretty much what TQQ is triple. Gold not doing much. Let's do year-to-date performance. Let's see what everything is at. The SPY is up 2% this year. The NASDAQ up 3%. Leverage funds are still down on the year. Got to be careful with your leverage funds. You got to buy them at the right time. Using the money flow. The money flow really helps with leverage funds. Doesn't mean you're going to make money. It just helps, okay? Gold. Beautiful year, beautiful year, man. Already up 26%, okay? Let's see what the biggest percent gainers are year to date. Palantir still rocking. Last year, can you name one of the biggest companies? It was Vistra Energy. And look at that follow through, man. Nuclear is on the move. Something we got to watch. Looks like a lot of people are buying farm equipment too. My name is Luke Fenwick. Thank you so much for tuning in and doing the Sunday scan with me. I really hope this helps you get a little bit richer. Please read the risk disclosure statement. Have a great night. Get some rest because tomorrow's the best day of the week. Adios.